Did you know you can use investment losses to lower your tax bill and potentially strengthen your overall portfolio? It's called tax loss harvesting, and here's how it works. As we approach the end of the year, it's really important to start looking at your portfolio and looking at your tax strategy as we go into the end of the year as well as in future years. But as we approach the end of the year, tax loss harvesting can be a really valuable way to offset some of the gains that you might have experienced this year or reduce your overall ordinary income by a little bit. Now, let's talk about some of the basics. So, tax loss harvesting is selling an investment at a loss to offset capital gains. You can use up to $3,000 of losses to reduce your overall ordinary income. The funny thing there is that number has not been adjusted since 1977. So we haven't seen an adjustment to that, and it may seem like peanuts in today's income landscape. However, I have experienced where tax loss harvesting can be a great tool to reduce that tax liability. In one instance, I had a client here this year who had a pretty significant gain from an investment that she made into a company. And when she received that liquidity option, she took it, and she also had some losses from another investment that she had made. So we were able to pair those gains with those losses and effectively reduce that gain by a significant margin. So we have to think about capital gains less those losses equals less tax. When we look at those short-term capital gains versus long-term capital gains, they are going to be treated a little bit different. So a short-term capital gain is going to be those gains or losses that occur when you own an investment for less than 1 calendar year. Whereas a long-term capital gain is going to be a gain or loss from an investment that you've owned over a year. With short-term gains and losses, those are going to be, or the short-term gains, you're going to typically be taxed at higher levels, and they're going to fall on your ordinary income. Whereas long-term capital gains are going to be typically taxed at a lower rate, and they tend to get more favorable tax treatment as it relates to the IRS tax law. With tax loss harvesting, we can manage those long-term gains, long-term losses, short-term gains, and short-term losses because we can have those match those dollars next to each other. And this can have a positive impact on your overall tax bill. What I often look at is tax loss harvesting is not just a tax move. It can also be an opportunity to reassess your portfolio strategy. A lot of the times we look at winners continuing to win and losers continuing to lose. So if you have that one investment in your portfolio that just has never really met your expectations, might be a great opportunity to reassess where it fits in the portfolio. And if you want to sell, could be a great way to have some tax benefit from that sale. The one thing I will warn against is to avoid what's called the wash sale rule. This is when you sell an investment and then you buy the same investment within 30 calendar days. This is not an ideal situation because it essentially washes out that loss that you experienced. However, the interesting thing is that you can actually do this with cryptocurrency. So the wash sale applies to those stocks and other types of market-related investments, whereas maybe a cryptocurrency sale does not necessarily fall into those wash sale rules. So something to kind of consider when you're building that portfolio or when you're evaluating those investments. The other thing that you can look at is you can use this as an opportunity to rebalance and realign your long-term goals. So over time, you oftentimes see things get out of whack. Maybe one investment did really well and one didn't do very well. And maybe they were at one point the same percentage in a portfolio and one's doubled that percentage and one's halved that percentage. This might be an opportunity to get back to even, sell some of the winners if you're looking at those as maybe having a little long in the tooth as far as those gains. So it might be a good opportunity to just reassess and rebalance the portfolio. If you're wondering how tax loss harvesting fits into your bigger financial picture, that's where we come in and help. We can actually apply some really cool financial planning techniques and some tax planning techniques to help you understand what those what that portfolio rebalance might look like if you were to take some losses, take some gains, and how those things might overall impact your long-term financial picture.